Read the question carefully. Let's have the format of P&L account. First of all, gross profit is posted on the credit side like this. Now all these are the expenses and the incomes. As we have learnt, expenses are bifurcated under various heads such as office expenses, selling expenses and miscellaneous expenses. Now look at these highlighted items. All these are categorized under administration and office expenses. Thus, on the debit side, all these expenses are shown like this. Also, note that as we are transferring the items to the P&L account simultaneously, we mark that item here. This will help you to avoid any confusion. The next head is selling and distribution expenses. Look at these red colored items. All these expenses are incurred while selling and distribution of produced goods. Thus, as these are expenses, so we transfer them on the debit side like this. The next expense head is miscellaneous expenditure. Items such as discount allowed, interest on loan and so on are categorized under this head and are shown here in the P&L account. Now, let's move on the credit side of the account. Here, all indirect incomes and gains are shown. So, can you spot out from the questions which all items should be shown on the credit side? Well, these are the items. So, we show all of them here on the credit side like this. Now, cross-check whether all the items have been posted in this account or not. Well, I suppose we have done it correctly so far. So now we can tally both the sides. The total of the debit side is 1,54,940 and that of the credit side is 9,49,550. Clearly, the debit side falls short of the credit side. So, the difference amount is shown on the debit side as net profit like this. This net profit is further to be shown as addition to the capital amount on the liabilities side of the balance sheet. You might be thinking why we haven't considered wages, whereas salaries and wages have been taken into account. The reason is quite simple. This item implies salary, which is paid to the officers who work in office. On the other hand, wages are paid to the workers in the factories. Hence, salaries are regarded as indirect expenses and are shown in the P&L account, whereas wages are the direct expenses, so are debited in the trading account. The next item of worth talking is wages paid for the installation of machinery. This expense is capital nature expenditure and hence is shown as addition to the machinery on the asset side of balance sheet. Lastly, look here. You can see that we haven't considered this. It is because income tax is levied on proprietor's personal income. So, it is not shown in the profit and loss account as this account is not related to business.